The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hi, folks. Thanks very much for tuning in to Breakout Investing on TFNN. My name is Ken Shreve. As always, thanks very much for listening in. Number to use to get through, if you want to talk about this interesting market here, it is 877-927-6648. My show airs twice a week on TFNN, every Tuesday and Thursday from 3 to 4 p.m. Eastern. And my show is also available as a podcast on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. Just plug those earbuds in, type in tfnn.mobi in your smartphone browser, and you can listen that way as well. I have a few charts to go over today, and if you want to look at those charts right along with me, you can do that right on Tiger TV on the homepage of TFNN.com. If you're listening live, just tune in to Channel 1. And the show is also archived on Channel 13. And don't forget, you can access Tiger TV now with your smartphone or iPhone or Android device. From your smartphone, just go to TFNN.com, and over on the right-hand side of the page, there's a little link you can click to watch Tiger TV on your smartphone. All right, let's update a chart of the Dow Jones Industrials here, see where we're at with about 50 minutes left to go in Thursday's session. Right now, Dow is down just 2 points. I mean, such a strong market here. Very, very constructive. Sellers just not around. Dow down 2 points to 12,676. Move over, take a look at the S&P 500. Pretty muted selling pressure in this index as well. It has actually turned slightly higher here, up 2 points to 1321. And the NASDAQ that really has been showing the best strength. When you look at the crop of leaders that have emerged over the past several weeks, you're seeing a lot of good tech leaders. You're going to hear people say that the NASDAQ composite is overbought. Right now the NASDAQ is up 11 points to 2859. Don't forget, we're at a point now where all three major averages, the Dow, S&P 500, and NASDAQ, are quickly closing in on these late April, early May highs. For perspective, let's take a look at a monthly chart of the NASDAQ. I'm going to pull that up in Tiger TV, because it's very interesting what the NASDAQ composite looks like on a monthly perspective here. Okay, so here you can see the monthly chart of the NASDAQ, and you've got a very constructive cup-shaped pattern here. So it looks to me, it's not out of the question at all to think that the composite will be able to take out its May 2nd intraday high of 2888. Thereabouts. So the good thing is that there seems to be a decent amount of leadership around, okay, because you need leadership in the early stages of a new uptrend. It took a little while for it to come around. Remember, the market started to rally off the December 19th lows, and there wasn't much volume. But even in the NASDAQ, we've started to see some higher volume gains in recent days. Volume right now tracking a little bit lighter than Wednesday. Not the end of the world. Yesterday on the NASDAQ, we had pretty stealth volume, 2.05 billion shares. I say stealth, relatively speaking, that's a pretty good volume day for the NASDAQ. Right now, NASDAQ volume is tracking about 5-10% below that level today. NYSE volume also tracking about the same, 5-10% lighter than yesterday. Yesterday we had 890 million shares on the New York Stock Exchange, which was also slightly above average. So it doesn't look like a major day of accumulation today for the market, but the fact that we're just kind of strong, hanging near highs here, very, very constructive. Coming up at the bottom of the hour, I'm going to have my good friend Keir McDonough join me on the program. Keir is another growth guy out there, very savvy investor. He's with Breakout Capital in Boston, Massachusetts. I'm going to talk to Keir about the market. That's coming up at 3:33, 3:34 thereabouts Eastern time. So look forward to talking to here. Taking a look at crude oil today is bleeding a little bit here. Crude oil down 1.3% to 96.36 a barrel. Let's take a look at the USO. This is an ETF that tracks the spot price of West Texas intermediate light sweet crude oil. And we'll see that the USO is currently trading down 26 cents, 0.7% to 37.12. Looking a little bit heavy up here. So if you ask me, it looks like this is probably the chances of lower prices ahead probably outweigh the chances for higher prices when it comes to oil. So the chart of the USO is under quite a bit of pressure. It's not really finding support at areas where, if it were really strong, it should be finding support. Looks to me like the USO at this point, the $35 price level could be in play. Again, right now trading around 37.12, so you could see another 4 or 5% lower in the USO in coming days, and we'll see what that does to the front-end oil contract. Taking a look at gold, gold continues to do quite well here. Take a look at the GLD. Before we talk about what the GLD did today, just to tell you that gold for April delivery added $9.80. That's 0.6% or so to $1,759.30 an ounce. That is its highest close, I believe, since mid-November, thereabouts. So gold continuing to find a bid. Take a look at shares of Randgold Resources acting well today, outperforming, up 1.6% to 116.67. Seeing some nice accumulation. This the GOLD rallied right along with the market on starting from December 19th thereabouts, and you have had several above average volume price gains in GOLD, Randgold Resources. It's not far from a potential breakout here, so you want to keep watching GOLD getting close to its recent high of 120.73. That would be its high set back in early November. So a lot of gold stocks acting right. I think in a recent show we also took a look at Yamana Gold, AUY. This is a stock also acting well here, so no shortage of gold stocks acting well. Yamana Gold today up 40 cents, 2.3% to $17.68. Technically, this stock is acting strong as well. Busy day of earnings. Let's take a look at some movers today, starting with I'll take a look at Qualcomm. Qualcomm looked like it was going to have a huge day. It's having a reasonably strong day. It was up big in aftermarket after the close yesterday. This company obviously very well positioned in mobile wireless. Shares right now up about 2.5% to $61.02. Nice gap up. It is trading near its session low, trading in its the bottom half of its trading range. It hit an intraday high of 61.95 today, trading at 61.02 right now. So well off its session high. Volume very heavy in the stock today on strong fourth quarter earnings. Remember, this is a market cap of $104 billion at Qualcomm, and you had 40% year-over-year revenue growth. Just amazing. They did $4.7 billion in the quarter. That's up 40% from a year ago. Earnings also solid, up 18% to 97 cents a share. So Qualcomm, one of several large cap tech names out there, acting very well. Let's also take a look at Nu Skin Enterprises, NUS, Nu Skin Enterprises. I've talked about this one recently on the show. It was setting up nicely. The one thing I noted was that even though it was forming a nice long base, and you can see the long base that started in November, there really was not a lot of signs of accumulation. In other words, as the stock started to retest its early November high, really wasn't seeing signs that big investors were in there buying. So this was a chart that needed more accumulation. Nu Skin jumped out of the gate. The numbers were very good. Nu Skin is a company network marketer. They do personal care products, anti-aging products, nutritional supplements, doing very well in Asia. New Skin broke out today over 51.67. It's trading just underneath that swing point right now, trading in the bottom half of its range. So not an overly impressive day for the stock today. Very heavy volume, and earnings were up 31% to 76 cents a share. Sales up 23% to 495 million. The company raised its dividend. So a lot of good going on. It's a very well-run company. Some sellers in the stock today for whatever reason. So, well, we'll see what Nu Skin does in coming days. But the numbers were very good at Nu Skin, and I did a video earlier this week, yesterday, as a matter of fact, over at the street, just talking about this company's fundamentals. The growth at Chipotle Mexican Grill, was good. This is another, it's a 20% grower here. Another restaurant stock that just continues to open new locations, growing annual earnings at a 20% clip. The issue, as I've been talking about, is that it is a stock that is up more than 400% since the start of the last bull market in March 2009. So this is not a stock that I wanted to be long at current levels. I did not want to be short it either, because shorting strong performing stocks like this is an easy way to lose money. So I figured I would just see what the company had to say. A lot of other restaurant stocks out there that I like very much. We'll talk about a couple of them in a minute. But shares of Chipotle under quite a bit of pressure today, and not terrible, down $7.75, a little more than 2% to $362.67. Looks like an outside day taking shape here, where the intraday high is higher than yesterday's high and the intraday low is lower than yesterday's low. So that's called an outside day, and something to be pay attention to if you've been long, if you've got a nice gain in the stock. The heavy volume today, it does look like there are some institutions in there selling. Chipotle does have its share of fans out there, no doubt about it, but in my view, the big money has already been made here. Taking a look at a couple of other restaurant stocks that are scheduled to report earnings next week. Let's take a look at Panera Bread. Panera is still trading quite well up here. Last buy point for Panera was in this 145 area, back right in this area. It had a little breakout, not a whole lot of volume, but it is hanging tough. Stock is only down 20 cents today to 149.94, so it's only about 2-3% above that last buying area. Still within buying range, but you're dealing with a company that is reporting earnings next week, specifically February 7th. After the close. So keep an eye on Panera next week and see how that responds to earnings reports. Ironically enough, Buffalo Wild Wings, another very well-run restaurant stock. It is up 41 cents today to 68.75. Some buyers in this stock recently, and it reports the same day as Panera next week. Both Panera and Buffalo Wild Wings after the close, February 7th. So when we come back, so much to talk about today. Busy week of earnings this week. We're going to have a whole bunch of earnings reports next week as well. But when we come back, we'll touch on Green Mountain Coffee Roasters. That stock is up big today. Big short squeeze there. Open Text, Tractor Supply, MasterCard. We'll touch on all that when we come back, folks. We'll be right back.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Coming up in the next segment, Keir McDonough from Brigos Capital in Boston, Massachusetts, a good friend of mine. We're going to talk to him about the market. But before we do that, let's take a look at some other movers here. I mentioned GMCR, Green Mountain Coffee Roasters, a stock that I'll tell you what, analysts don't seem to fully understand how this company keeps its books and accounting, all these things. There always seems to be some overhang for the company. Not sure if that SEC investigation is still going on. I don't think it is, but GMCR reported pretty nice numbers after the close Wednesday. Sales, very impressive, up 102% from a year ago to $1.16 billion. That's an acceleration from the accelerating growth, I should say, from the third quarter. Earnings up 233% from a year ago to 60 cents a share. So what you have going on today, Green Mountain Coffee Roasters up 24% in one day to 66.48, and folks, Green Mountain had 26.5 million shares held short as of January 13. So I think you can be assured that that short position is probably going to fall when the end of the month short interest data come out for Green Mountain Coffee Roasters. But a lot of shorts obviously caught short here, and this is still a damaged stock. I mean, you see moves off lows like this, similar to what we've seen in Netflix recently, but Green Mountain, a lot of technical damage, a lot of institutional selling in this stock. Not so much today, but I think a lot of today's move is short covering. I just bought a new Keurig machine. Hey, I was an early adapter to these to this single cup coffee, and our Keurig machine went out, it was probably about a month ago, and you know, we were 2 weeks without one, and boy, we really did miss it. So we're happy with our Keurig machine, and don't really buy the single cups much. We have that adapter where I can put my own coffee in there and make a single cup that way. So love the Keurig machine, and the coffee in their single cups is pretty darn good too. So shorts covering their positions today in Green Mountain Coffee Roasters. Let's also take a look at Open Text. Probably a little short covering going on in this stock too. Open Text makes content management software, but another big move in this stock too, up 15% today to $60.74. This is a stock that technically did not look good at all going into the earnings reports, but 6.9 million shares held short in this name as of January 13th, a much smaller short position than Green Mountain, but still, based on its average daily volume, relatively high short position. Anyway, Open Text earnings there of $1.39 a share, up 14% from a year ago. Sales up 20% year over year to $321.5 million. The credit and debit card companies also doing well today. Shares of MasterCard, they had earnings pretty decent. Big move here. You can see how healthy this market is active. You're just seeing a lot of big moves, a lot of signs that institutions are getting back into some of these names. Maybe not so much so in Open Text and Green Mountain that we looked at, but we'll talk with Keir McDonough when he comes on about some of these institutional quality names that are making nice moves here. MasterCard looking pretty good. It was trading below its 50-day moving average for several days. Really looked like it was going to base for a while. Stock is up 23 bucks today, 6.5% to $381.04. $381.04. Could see the stock try to take out that $385 price level. It's going to be its early December high. Not really a long enough base, though, I don't think. So if this one breaks out and continues to move higher, probably going to take a pass here. I run the Ultimate Growth Stocks newsletter, by the way. I did not mention that at TFNN, and I've been adding stocks to my model portfolio. Bought another one today, so I think I have 8 or 9 stocks in there right now. So many stocks to choose from out there. So many stocks working. It's really tough when you have a watch list of 10, 15 names that all look good. You gotta find ways to narrow it down and really hone in on the best one you think has the best chance of outperforming. MasterCard is just another one of these stocks that has been running higher for a while. Visa also having a good day in light of strong numbers from MasterCard. Shares of Visa today up $3.42, trading in the top half of its trading range. Good demand, good volume today, up 3.3% to $105.93. That's shares of Visa. Their earnings are due next Wednesday. Earnings next Wednesday from Visa. And you know, this stock is is it extended? Is it not extended? It's really not coming out of a base today. That's the problem. It consolidated gains for a few weeks. Typically, you like to see a base form 5, 6, 7 weeks. But good day nonetheless for Visa. All right, folks, coming up next, Keir McDonough from Brinkhouse Capital in Boston. You're listening to Breakout Investing on TFNN. We'll be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for tuning in. As always, quick check on the markets here. About 25 minutes left to go in Thursday's session. Dow down just a little bit, 4 points to 12,712. NASDAQ outperforming again. Real strength in this index. Not only the NASDAQ composite, but the NASDAQ 100 as well. But the composite right now up close to 12 points to 28.59, and the S&P 500 up a couple of points to 13.26. We are joined right now by a good friend of mine. We go back a long way, Keir McDonough from Breakout Capital Management in my old neck of the woods, Boston, Massachusetts. I think you can check out Keir's website at breakoutcapital.com. And, he's not big on Twitter yet. We're going to get him into Twitter soon, but his Twitter address is at Keir, KIERMCD. Did I get that right, Mr. McDonough?
You did, Mr. Shreve.
All right. Nice to talk to you. How you been, buddy?
Doing great. Good catching up with you.
All right. Well, I'm sure you were up burning the midnight oil last night, going through that Facebook S1, or maybe not.
Maybe not.
Well, in the notes you sent me, you say you think that this Facebook IPO announcement, they're probably going to be coming public, and sometime in the second quarter, April, May, June, probably April or May sometime. But you think this sort of the Facebook IPO frenzy could be another catalyst for this market, huh?
I think perhaps it can. The IPO market, looking on the bigger picture, has recently begun to show some life. And in a good uptrending market, we usually have some fresh new companies or new merchandise, if you will, coming to the market. The last time we had a company of this size with this much sex appeal, if you will, was Google when it came out in 2004, and that kicked off a pretty good rally at that point also.
Gotcha. Now, what about IPOs? I mean, you look at recent IPOs like some of these internet names. I know LinkedIn and Groupon, they're actually going to be coming out with earnings next week, and I think Zynga follows a week or two after that. But their IPOs, they came public and really don't have much to show for it at this point. I mean, are you looking at any particular IPOs, companies that have come public over the past 3 to 6 months that are holding in there well, that actually have your interest at this point because of either good fundamentals, good technicals, or both?
Yes, indeed. There's quite a few out there, and they're from different industry groups, which makes them interesting. One that I'm looking at right here, and it hasn't based yet, but it came out, was a company called Guidewire, GWRE. Stock's making a new high today at almost 20. It came public, I think, around 13 just recently. Another one is Michael Kors, which is a retailer. They've done very well since they came public back around, I think, around $22 when they came out. So there are a number of, another one is UBNT, technology company that just broke out yesterday on some pretty good volume and had very good earnings also. It's Ubiquity Networks.
Ubiquity Networks, and the ticker there is U?
B as in boy, N as in Nancy, T as in Tom.
Gotcha. Well, I'm familiar with Michael Kors. I've taken some calls about Michael Kors on the program. This is a stock right now that's probably extended. I think their earnings report is coming up over the next couple of weeks. But it's kind of an important lesson for individual investors. I mean, you had Michael Kors. It hit a high of 27.58 back in late December, and then it broke out in pretty decent volume over that price level. Right now, though, this is not a stock that you'd want to chase up here. You basically want to let it kind of consolidate, pause, digest gains, and then wait for an entry point. Is that the way to approach this one?
Absolutely. The stock's extended from here. It doesn't mean you don't keep an eye on it. I think that's probably the best thing to do, but try to get a higher probability spot to own this.
Gotcha. We were talking earlier this morning, Keir, and it was like one of those mornings where, probably 2 or 3 weeks ago, the watch list was pretty full with prospects, but over each day that passes, it seems like the watch list kind of builds and builds and builds, and before you know it, you wake up and there's a morning like this where you just got a lot of action. Why don't you tell me and the listeners kind of, what do you do when a watch list gets so big and there's so much working out there, and say you only have room to buy 1 or 2 stocks, yet you've got 10 or 12 that are acting well and look good? How do you go about kind of narrowing down 10 really good stocks to like 2 great ones with the best potential?
Sure. I think you want to look at it 2 ways. First, fundamentally, you want to find the companies with the biggest earnings, biggest sales, that really have a dynamic product or service. So you start with that. Secondly, when the stocks break out, I think volume. The bigger the volume, the better. You see breakouts at 200, 300%, 400% or greater. That shows unequivocal demand by the institutions. So that's how I approach it, is twofold. The best companies, and I'm trying to find real demand moving into these names.
Gotcha. And you actually told me a while back, and it was actually good advice, because one thing I hear from people saying, well, Ken, the market opens, and an hour or 2 into trading, there's a stock that's acting well, and volume is very heavy. Yet by the end of the day, it cools down and ends to be average volume or even below average volume. But I'll never forget, it was a while back, you told me a good rule of thumb that you use is to, if a stock that normally trades 1 million shares a day, if you can get close to that level during the first hour, maybe 2 hours of trading, that's generally a pretty good hint that volume is going to be strong throughout the day. I thought that was pretty good advice.
Sure. I think I read that I took it from somebody else who had observed over the years, and I started to notice that if you get real demand, oftentimes you'll see it in the first half hour. You'll see the whole daily volume trade in the first half hour. That shows a lot of demand right there.
Yeah, and it's also why that you and I are both not afraid to buy a stock when it gaps up in price. A lot of people see a gap up and they say, I missed it. I'm not gonna buy it. But demand is so strong during a gap up in price that it can often be a perfectly acceptable time to buy. All right, Kier. So talking about this market, I mean, clearly the market's face is changing here. I pulled up a monthly chart of the NASDAQ. I really don't look at monthlies that often, but when you look at a monthly chart, I don't know if you have if you're at a desk and you can look at it right along with me, but you just look at a monthly chart of the NASDAQ composite. This is a pretty bullish picture. Would you agree? Or
Absolutely. I've been looking at the weekly chart. Thanks for pointing this out, because now we could take out this 2887. We're now going back to 2000 highs. That's right. And you've been talking about sort of accumulation. You've seen some accumulation. There's a leadership that is definitely taking shape. It's widespread among a variety of sectors. But if you really do get meaningful breakouts in the NASDAQ, S&P 500, that could bring even more money in from the sidelines, wouldn't you say? It would appear that it's starting to happen, and we'll see if it continues to happen. One of the indices I look a lot at is one of IBD's proprietary index, their 85 index, which basically measures the stocks with the strongest relative strength and the strongest earnings per share strength. It had been lagging a fair amount. It finally got through its 200-day moving average yesterday, and generally better things for growth stocks or stocks in general happen when the major average is living above its 200-day. So I take that as a positive moment. Gotcha. Well, another name that you mentioned earlier today that really had fallen off my radar, but why don't you talk to me a little bit? I'm going to pull up a chart for Seagate Technology for those people watching in Tiger TV over at TFNN.com. But you mentioned Seagate Technology. Stock had a big day yesterday, big gap up in price. What is interesting about Seagate to you right now? Sure. The symbol on that is STX, Samsung X-Ray. They announced earnings yesterday. They had already pre-announced. But the numbers came in, the revenue side came in far larger than the street was looking for. They are basically a hard disk drive maker. It's a very cyclical industry. But earnings for the quarter are up 300%. Next quarter, they're going to be up almost 700%. Yesterday, volume was up over 7 times average daily volume, which is incredible. I think it traded its whole average volume in about the first 20 minutes. Pretty exceptional. And the company said they're going to buy back up to 25% of their outstanding shares. So there's something now. I always thought that the disk drive business. I mean, is Seagate reliant at all on a robust PC business in order for them to do well, or because I always thought the PC market was kind of in the not doing very well, and the future doesn't look great for PCs as tablets gain more traction as our disk drives. I mean that is a PC business, right? It is. I think the ultra thin notebooks that are coming out, I think similar to the AirBooks that Apple has. I think it's a newer market that's driving people back into that market itself. So gotcha. So the fact that you've got a 25%, big stock buyback. And by the way, they initiated a dividend of $1, which is almost a 4% yield on this. Looking good. Add that all up in the demand that we saw yesterday, and the stock's up incrementally again today after having basically gone from 16 to 26, where it is right here, just under 26. There's a lot of demand for this name. No doubt. So you talked about broad leadership in the market. I mean, what particular sectors? I mean, you got companies like Seagate, obviously large cap tech working. Qualcomm, very nice numbers from that company after the close Wednesday. I mean, just talk about this broadening leadership outside of technology. Where else are you seeing opportunities? I'll mention one other tech name. Apple obviously had a great quarter last week, and the stock moved to all-time highs. We saw earnings today from MasterCard. And they had a terrific quarter. The stock's up 6.5% today, almost $23. Visa is moving to all-time highs. Also, very good, solid businesses. The aerospace industry has a number of companies, component companies in there, Triumph and BEAV, which are both acting very well. Both broke out in the last week or so. The housing stocks also look interesting, whether it's Home Depot or some of the builders like Lennar. So we're seeing a lot of strength there. And also biotech is also, and medical stocks are acting very well. Intuitive Surgical, Biogen, Celgene all look very, very good here.
Interesting. So the more broad the leadership, the better you have to feel about the rally, I guess it is, right?
It makes sense. And I was looking at the new high list yesterday, and it was very broad for starters, but secondly, it was the highest number I had seen in months. So
Interesting.
That tells me that we're seeing a lot of demand in a lot of different sectors, so it feels like money's coming into the market.
That's really what when we came off the lows starting December 19th, and then we ended the month of December and came into the first week or two of January, it never really felt like there was money coming in from the sidelines. You didn't really have the volume pops. You had the leadership in the market really wasn't around. You still had the real estate investment trusts that were hitting new highs, but the market's face definitely seems to have changed, and the supply demand, the price and volume in the major averages definitely improved. I know you don't like to predict, and that's the way we kind of both were brought up in the way we invest, but as a stock or index approaches a key level of resistance or a prior high, so we have the NASDAQ composite getting closer to that 2887 price level. I think would you agree that it's important not to get too complacent here, even though the market is acting well? It's sometimes possible to see a little bit of a shakeout or a handle area form as a stock or index approaches a prior high. I mean, sometimes you can just kind of bust right through it and keep going higher. But I mean, there's that possibility between now and the end of February, that we could just have a mild little shakeout in preparation for a big breakout over these late April, early May highs. Who knows if it's going to happen, but it's something to watch for.
That's the important thing, is just watch for the general market conditions. To see us pull back 2 or 3% from here would not be a big deal. But if you start seeing some heavy distribution days, some very heavy selling days by institutions, that might tell you that the tone of this market is changing. But for right now, we're in a nice solid uptrend, and we'll stay in that until we're not. That's probably the best way to approach it.
Yeah, no doubt about it. Keir, good to talk to you, buddy. Always a pleasure. Keir McDonough is a money manager from Boston, Massachusetts. He runs Breakout Capital Management, and for more information, go to breakoutcapital.com. Appreciate it as always, Keir, and we'll talk to you again soon.
Thanks, Ken.
All right, take care. All right, Keir McDonough. Keir and I used to, way back in the day, we used to teach IBD workshops together. We used to do these level 2 technical analysis workshops. So Keir's another student of the market like me, and smart guy, disciplined guy, and always like to get his take on things. So thanks very much to Keir McDonough for coming on the program. All right, folks. Looking at a couple of other names here, other stocks that I'm watching. So much working in this market. It is challenging if you got 10 names that all look good. Let's take a look at F5 Networks as we head into the final break here. This is another stock that I'm watching here. I like the fact that it's been able to hold on to its gains after its gap up a couple of weeks ago, acting very well. Could see more strength here. Like the story at F5. Great article in IBD on F5 today, the CEO interview. All right, folks, we'll be coming right back. You're listening to Breakout Investing on TFNN.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to tfnn.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to tfnn.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. As we head into the close here, let's see what's going on with the market here. Once again, just kind of just solid day, really not much movement either way. Indices doing a very good job of holding on to recent gains. Bottom line, this is a strong market, and it will remain a strong market until proven otherwise. At this point, there's a such thing as a healthy pullback versus an unhealthy pullback. A healthy pullback from here would be just low volume declines, sort of just not going down much, not much volume. You don't want to see, increasing signs of distribution, higher volume declines in the major averages. If you get one or two, it's not the end of the world, but if it starts to become prominent, that's a problem. But right now we've got the Dow down about 3 points to 12,713, NASDAQ up 10 points to 2858. Only about 30 points now from its May 2nd intraday high, and the S&P 500 up about a point to 1325. Let's also check on Mercado Libre here. This is another stock that frankly has the look of a potential leader here. Shares of Mercado Libre up $2.79 to $93.43. This is clearly another breakout candidate. Company provides an online marketplace and electronic payment platform in Latin America. They're based in Argentina. It's an ADR. Very, very strong growth at this company. Earnings are going to be later this month in February, around February 23rd. No official date yet, but earnings expected to be up 42% from a year ago to 51 cents a share. Sales up 41% year over year to 87.7 million. Annual return on equity at this company, 40%. That tells you that there's a good management team in place here that is running the company very well. So Mercado Libre looking very good. We didn't go over economic data. Let's do that because, well, tomorrow we obviously have the jobs report for January. Right now, or last I checked, non-farm payrolls were expected to be up 155,000. That's after 200,000 job growth in December. The unemployment rate should be around 8.4, 8.5%. Earlier today, weekly jobless claims down more than expected. Good news there. Claims are now at 367,000. That was down from 379,000 the prior week. So hopefully we'll get a good print on the jobs number tomorrow. No reason to think we won't. All the data seem to be pointing to continued improvement in the labor market. Unemployment rate, unfortunately, probably going to stay stubbornly high for the foreseeable future, but hopefully we'll just start to see 200,000 plus job growth consistently from here. A lot of news in the retail sector today. Didn't get a lot of headlines, but let's just take a look at some movers. Same-store sales results in January from a lot of the nation's retailers. Another great number from Limited Brands. Same-store sales up 9% in January, almost triple what was expected. Nice breakout for Limited Brands today. Of course, they own Victoria's Secret, Bath, and Body Works. Stock is up $1.59 today to $43.49, and also good numbers from Costco, another well-run retailer here. The stock's having a good day, up near its session high, up $2.36, 2.8% to $85.58. So also good numbers from Macy's, Gap having a good day, GPS. So pretty good news from the retailers today. All right, coming up after the close, hey, more earnings reports. Wynn Resorts, good numbers from Las Vegas Sands yesterday after the close. Take a look at Wynn Resorts quickly. Shares of Wynn Resorts up $2.44 to $120.19. Folks, don't forget to get a trial to Ultimate Growth Stocks right on the homepage of TFNN.com. Coming up next, the Tom O'Brien Show. Have a great afternoon, everyone.